summer watch list. So on Saturday, we had the summer solstice, which started the official beginning of summer. So just about any way you slice it and dice it, we're in the summer. So we're going to talk about some of the reopening trades that have been talked about quite a bit already. But we're also going to talk about some new concepts, such as the deurbanization trade that people are looking towards. And so that's why we're going to just show you how to create a watch list for stocks to watch out for. And also I'm going to ask our attendees if there are any symbols that are on your radar. So please just start typing those in, and we could add those into our community watch list. All right, so Kevin, are you ready to get started?
I am, yeah. Let's get the week started. Look at the charts and some markets here.
Now, any stock symbols that we share with you, any charts that we look at, they're being shown purely for informational purposes only. It's not intended to portray any type of recommendation to run out and put on any trade. It's just so that you get more familiar with what's going on in the market and also get more familiar with some different tools and features that are available to our customers for free. Now, towards the end of this session, we will take a look at some options concepts. So we've got some stocks, we've got a couple stocks still trickling in with earnings. I thought we could take a look at one of the stocks coming out with earnings and just check out to see what the options market, what their expectations are for a range of movement. So that means we'll be talking about options. I want to stress that options carry a high level of risk and they're not suitable for all investors. So before you open an options account, read through that options disclosure document. All right. And once again, anything we share with you, it's just for demo purposes only. All right. So what I thought we could do, Kevin, was, well, this is what we're going to be focusing on later. We're going to take a look at some charts here on Street Smart Edge. But before we do that, I thought we could take a look at the calendar. I thought we could take a look at the economic events that are coming out this week and maybe especially some things that you're paying more attention to. So anything you'd like to highlight here?
No, it's going to be interesting this week. So we have not only a lot of housing data, so we will be seeing. We had existing home sales today. We had the mortgage application index, which has been increasing very, very rapidly over the last month and a half. And then at the end of this week, the one that I'm actually going to be looking at is personal consumption expenditures. So basically, it's like the CPI. But it basically is only looking at items that individuals are paying for and to be able to track pseudo inflation for individual consumers. So that's going to be an interesting one that we see as we have seen not only oil and some of the energy markets obviously have a big move up on the side that has some volatility, but also what the cost of goods were, those that were going through this transition period from working in the office to either working from home or maybe even going into unemployment. So the spending habits can change through that market cycle, and I think these numbers here are going to be able to shed some light on the overall cost of that when it comes to these consumers. So that's really what I'm looking at. What about yourself this week?
Sometimes there are things that don't show up on the official economic calendar, but these are some things that, attendees should be watching out for, especially if you're trading bank stocks. So later this week, the Federal Reserve is going to be releasing its annual bank stress test. So, and the way that they are stressing these banks is they're checking to see how these banks perform against different types of economic recoveries. And it's actually based on the actual shape of the recovery. So they want to see how the bank is performing against a more rapid V-shaped recovery, or maybe a slower U-shaped recovery, or maybe a rough W-shaped recovery. And actually, earlier, Liz Ann Saunders, who is Schwab's chief investment strategist, she was saying that we are really going to be experiencing more likely these rolling W's. So, what she's saying is, we're probably going to be experiencing some volatility in the overall economy. So the data points will be, up and, rather up and down. So they're going to be stress testing these banks, and we'll actually create a watch list later to check to see how these banks perform. And the thing is, this could also impact the dividend decisions that some of these banks, you know, further down the road have. So if you do hold any of these companies for dividends, it could be tough if they, fail to meet the stress test. But there are some options traders out there that might be formulating some different option strategies, and it's a good idea to check to see, and I'll show you how to do that. Check to see if there have been any, larger volume trades on any of these underlying. So we'll check that out later. All right, now, and some other news too. We're going to talk about Apple a little later. It's not on, it's not on the actual calendar, but today Apple's Worldwide Developers Conference did kick off. And I know, Kevin, when we take a look at Apple a little later, you've got some news stocks up today, and some reasons why it's up. So we'll take a look at that. All right, and what else? Let's take a look. Let me give you a sneak peek at the earnings calendar. Now, here we go. I already have it up here. Now, we didn't have any earnings actually today, but if you fast forward, we have more later in the week. And I thought it might be interesting to take a look at Nike. That is after the close on Thursday. So we'll take a look and see what the at-the-money straddle is going for. And I'll also talk about the previous moves in the actual stock itself, and how options traders, if they're making markets, how that straddle helps with just interpreting a particular range of movement. So I thought we could take a look at Nike a little later. All right, Kevin, anything else before we move on to the major, the charts on Street Smart Edge?
No, I think you covered it for the highlights for the week. Let's go to the charts and look at some indexes.
Great, let's take a look. So here's the S&P 500. Let me zoom in a bit here. Let's zoom in a bit. You can see, let me go 3 months here. The 10-day is that orange line. You can see we were earlier below the 10-day, but now we're right above that on this green calendar. So remember, if a green candle, if you have a green candle, that means that the current price, or at least the closing price, is higher than the opening price. And so you can see that candle up above that 10-day orange line. We're above the 20-day, and of course we're above the 50-day, which is blue, and the 200-day, that is aqua. Now, last week, the S&P 500, of the 4 major indices, it performed second to worst. The Dow was up 1.1%. The S&P 500 last week was up 1.9%. And remember, on Friday, we had a very choppy session on Friday. There's been a lot of the headline news over the past few weeks that we're seeing a spike in new COVID-19 cases, and we could see an increase in areas such as Florida, Arizona, and Texas. Right now you're not in Colorado, but how's Colorado doing? Are there levels spiking in Colorado?
I haven't seen numbers that indicate a spike. I think we're holding pretty steady, but we're still reopening, and I can say that from a Colorado standpoint, we've been pretty diligent when it comes to wearing masks and trying to social distance compared to, some of the other states have seen and are driven through. So I think we're doing a pretty good job right now, but I think it's also to be a little bit expected as we start opening up. We will start seeing a lot more cases. I don't think the case count is really what the streets really worried about, Nina, as so much as the hospitalization rate, because I think the
Yeah, right.
hospitalization rate is really the impact. That's really going to be the problem. Just because if somebody has coronavirus, if they're asymptomatic, as long as they do the proper social distancing, it should be a little bit of a lower risk than say those that are going in a hospital. If we see the hospitalization rate continue to go up and rise and spike, I think that's what's going to cause some concern for the overall market. And we actually have seen it. So Apple, like you said, they're actually closing some stores in some of those states, Arizona and Florida, I believe. Now, it's 11 stores out of 596 storefronts, I believe, that they have. So obviously it's relatively small. But, I wouldn't be surprised if you see that trend happening with some of these other bigger corporations as well. And it's not so much, obviously, they want to protect their consumers, they want to protect the employees. And I think there's also that gray area regarding liability as well. And until we have that direction, I think you're going to see businesses trying to err on the side of caution moving forward.
Yeah, that was one of the downers on Friday. So they said that they would temporarily shut some of those stores in states like, Arizona and Florida. Also, there were reports that cruise lines are agreeing to suspend U.S. port operations until September 15th. That came out, and what else came out? And then on Friday, so the markets were up. We saw 11 sectors were all up at one point, but then when this news all came in the end, healthcare was the only sector that actually stayed in the green. Now, Kevin, if we go back, well, if we just stay on Apple, they right now there is the Apple's Worldwide Developers Conference, and there was news that there were improvements on their smartphone watch, that they included more health and fitness features, so it's been enhanced. And if you have any particular stock that you're looking at and you want to see, what's the latest news on the stock, what you can do is go to Launch Tools and let me see, click on News, which is right over here. And I created a quick tab. So see these tabs right here? Just click on that plus sign and then name it right away. Trust me, name it right away. I'll call it News 2. And then I'm going to have that news page float and fill the page. We'll click on that. And then you can see the latest news on the particular stock. But you have some additional news about Apple, not just about the smartwatch.
Yeah, so Apple also announced that they're going to actually be using their own chips for their phone technology instead of using Intel chips, which is very interesting. So a lot of the time, Apple does a really good job of trying to outsource their work and try to bring in all the components to make their products, but looks like there's going to be a little bit of a competitive advantage for them to create their chips and utilize their chips in-house if they're using Intel. Now, initial reports that I have seen is that the financial impact of Intel is not going to be that great, but it could be a reputational impact that could impact other businesses down the line that may want to utilize their services. So we'll see what happens with Intel and their overall stock within the next 3 months, 6 months. I'm sure that when they have their next conference call, they probably will discuss this pretty briefly. But some pretty big news coming from Apple, and I can tell you that right now, I mean, we've seen the stock just really just shoot up on the upside and continue to not only move up to new highs, but also really carrying the NASDAQ and index
Right.
as well. So when you're looking at the things, it's really about 5 or 6 stocks that's really pushing that overall index higher and higher compared to the S&P 500. So very, very interesting times when it comes to this stock here.
Now, if you go back more than a year ago, Apple did, originally they were using the modems, they were using Qualcomm modems, and they had a legal issue, and they resolved that particular issue. And they have a deal for the next, I think there's about 5 more years to use the Qualcomm modem. But in the meantime, they did buy from Intel their modem, which isn't as good as Qualcomm, because I've read that Qualcomm's modem is the best in the business. But they bought Intel's modem, and they couldn't use it right away because they have to improve it. So they put their team of people with Intel's team to make it better, to make it more robust. And eventually, when their deal with Qualcomm just expires, they'll be able to bring on board their in-house modem, which is based originally off of Intel. So as you pointed out, they want to move to having their chip, creating an in-house chip. Now they're, trying to, reduce costs further by just making everything, all the component pieces, made in-house. So that's quite an interesting move that Apple is doing. All right, now let's take a look. Now, are there any particular levels that in the SPX that you're paying special attention to right now, Kevin?
I'm still looking at the 3100 level. I still look at that as being a really big inflection point. We're kind of at that level right now. So I would say that would be our first level of resistance that I'm looking at. And then obviously the 3000 level as well, which I would say, again, going to be significant. But, as we've been talking about, last couple of weeks, we're continuing to see this little bit of a range between that 3000 level and roughly about the 3250 area. And, not surprising, we're kind of seeing the economic data is not really that well, but the market, the street itself is really not too concerned with some of the economic data that's coming in. And there's been some bright spots that are out there as well. But I think the overall cloud in the market right now is, the dark cloud right now is, like I said, the hospitalization rates for COVID-19. It looks like the job numbers continue to trend on the upside when it comes to the unemployment rate. I would say we're maybe continuing to lose for the unemployment rate. We might see another jump on the upside here, but I'm really looking at that range of 3250 for the high side for the support, and then for the resistance, and then looking at the 3100 level for the support.
Yeah, definitely the markets are not looking at the short-term fundamentals because earnings are going to kick off in a couple of weeks. And FactSet, they actually slightly lowered their second quarter earnings estimates even more. So previously they were expecting second quarter earnings to drop 43.5%. They increased that drop to 43.8% as of Friday. So earnings, everyone expects them to be ugly, and but still, when their FactSet is projecting that as we head into the next year, that we'll start to see earnings, positive in more of the sectors. But it is going to be a tough go over the next couple of months. Now, and this reopening trade, we've seen a lot of trading going on in airlines, cruises, and hotels. And last week, we saw that back off a bit. And let's take a look at a couple other indices here. Let's take a look at the Dow. And the Dow last week was up for the week 1.1%. Let me put up a year chart. So you can see that you can see where our all-time highs are, 29.5. So we've got what? We've got 4,400 points to go from those levels. And let me take a look. I already have a Dow Jones watch list set up. Let's just take a look at our Dow 30 and see which ones over the past month, which ones have moved the most. Let me do past month. and we could see Boeing, uh, and then you could see Apple. Apple's up 13% over the past month. All right. Now, let's take a look at the NASDAQ. And Kevin, you were talking about just how technology stocks are leading. And, what about, we had someone asking on Trader Talk, has the NASDAQ gotten too far ahead of itself? Would this be a place to go short? And I think it's pretty tough if you are bearish to go short this type of market. So what are your thoughts on the NASDAQ?
Yeah, it would be, I agree with you, it would be a little tough to look maybe at the shorting stock. If you wanted to look at an options trade, I would think that probably would be a little more conservative. You're using less capital. But from the NASDAQ standpoint, it's a very interesting dynamic that we are seeing. We're actually seeing, and I'm not saying that technology is a safe investment or what have you. I know that that's not the right nomenclature, but the street and some institutional investors that are out there are looking at technology and looking at some of these things like the Facebook, Amazon, and they're actually looking at that as pseudo safe havens compared to some of the other sectors that are out there. And you're seeing the money flow into some of these technology names where, yes, they're not paying a high yield if they're paying a yield at all, but their ability to have consistent growth, not only just within the last 3 months, last 6 months, to have continued growth for the last 10 years in pretty much any type of market cycle has really been attracting a lot of that, I would say, institutional money or smart money. When you're looking at the risk reward, you can look at it from a traditional market, and maybe you can talk about this, but from a traditional market, you would typically see high volatility, and you see a little bit of a sell-off. You typically see a little bit of a movement into some of the consumer staple companies. You'll look at movement even in the energies and utilities because of the yield, but we're actually not seeing that inflow into those sectors as much. Now, consumer staples, we saw a little bit of a push as we were going on the downside for the overall marketplace, but we're not seeing that same type of movement into some of those higher yield stocks that are out there because the market itself is looking at it and saying, well, risk reward, energy is continuing to get heat up, utilities are doing okay, but I can go into technology for a little bit of a higher beta and for, let's just say, the same risk that is out there. So will that trade continue? That's to be seen. But outside of like those 4 or 5 or 6 stocks that I've kind of mentioned, Facebook, Google, Amazon, look at Tesla, some of those stocks continue to go up, but we are seeing a little bit of rotation for some of the other stocks outside of it, maybe those 10 in the NDX. You're seeing a little bit of a rotation out from Zoom. You're seeing a little bit of a rotation out from, let's say, Peloton. Now, those names actually, Peloton popped today because of price target adjustment. But I think that's really what the market is looking for. Is they're not really trying to go into treasuries. Treasuries offer low yield, right? Nicely safe haven, but low yield. The gold trade has kind of fell out of favor for whatever reason. They're trying to still chase yield. They're going in the technology sector a little bit high beta compared to the overall marketplace, but it continues to pay off. I mean, how long will that last? What do you think, though, as far as your overall in the market?
Well, we do have a question that popped up about sectors, because you were talking about, different sectors and how they've been performing. And Joel wants to know, the Schwab sector views, they just came out, and I can show you all how to get it as well. And Schwab has the financial sector as outperform. And they did, I believe that they did reduce healthcare sector to from outperform to simply market perform. And I'm not part of that team. However, Robert Fleming is part of the team that does the research and analysis. And so, I'm going to have to actually, it's great when he's on. He'll be on closing remarks later this week. And so it would be great to have him go over the sector views along with Liz Ann Saunders, so she helps formulate those levels. But I know a lot of people who trade financials, they really watch the 10-year. And that's what we have up here right now. This is the TNX. This is the yield on 10-year notes. And what that number that you see translates into, that's simply 70 basis points. That's 7/10 of 1%. That is the current yield on a 10-year. So, I mean, if you want to be bullish on the financial sector, you really have to start seeing overall yields and a steepening of the overall yield curve. You don't want all of the yield one on top of another. That creates for a very, very tough marketplace. But definitely watch the 10-year if you're interested in financials. But these rates, sometimes when they get low, you think that they can't get much lower, and they are just historically low right now. I don't know, Kevin, what do you have to say about just interest rates or treasuries in general?
Now they continue to stay low, as you said. Now, from a futures type of standpoint, you're looking at the Fed funds rate. From the Fed fund rate standpoint, August of 2021 is still actually pricing in for potentially having negative yields for Fed fund, or basically like that overnight lending rate that is out there. So I think that's still in the back of some institutions' minds that are out there. But just hearing from Powell, the last month and a half, it seems like he's kind of really going against the negative interest rate type of marketplace. So we'll see if that's just the market itself having basically pricing it in to be able to hedge themselves because of the really large positions that they already hold, or maybe that's just an overall indication. But you're right. The outlook of interest rate movement the last year and a half has definitely defied all logic when it comes to every trader that you talk to on the street, where we were talking about actually increasing rates about a year ago, potentially having increasing rates about a year ago, and then this complete reversal to cutting rates and continuing to cut them, and then now I'm basically having a 0 to 25 basis points rate at this point in time. No one, I don't think, in the street actually projected that, but finances have been getting hit pretty hard lately.
And the Federal Reserve also came out and said that they will begin buying some corporate bonds. Now they already started buying different ETFs like the LQD. So you can say that this particular ETF shot up, and it's holding well because we do have lots of liquidity in the marketplace. We have central banks all over the world just adding, adding more money and going out and doing infinite quantitative easing. They're buying different types of products out there. So I guess if they've got the backstop, and that's one reason why our marketplace rebounded so much, even though the earnings are going to be really lousy for this quarter. But we've got also Congress is working on a deal, maybe some infrastructure. I don't know if that's going to go through before the election, but there's been some talk about that. All right, let's take a look and well, we looked at the NASDAQ, right? There we go. The 1-year chart, and we already took a look at some of those technology stocks that you made reference to, Apple, Facebook. Let's just take a peek at Amazon. That's one of the work from home, stay at home play here, and when it comes to retail sales, the pure online play, this has been a strong performer throughout the pandemic, and we're starting to see some improvement in overall brick and mortar, retail sales as people start to, go out go out more. And I was surprised that actually clothing did improve because it completely plummeted once the pandemic hit. All right. So Kevin, what I thought we could do was to create some different watch lists. I want to know what stocks you're going to be following this summer. Maybe it's a continuation of the reopening trade. And I also thought we could take a look at some summertime, some, things that we typically like to, where we like to travel in the summer, and also the de-urbanization trade. So let me show you how to create a watch list. Now our watch lists are here under Launch Tools. Then you simply click here on Watch List. And I've created a lot of different lists here. Here I have a list of sector ETFs, and I need to clean them up once in a while. I've got some futures thrown in here just so I can compare and contrast. Let me remove this one. And I've got the Dow 30, I've got the S&P 100, all of those stocks listed here. I also have the semiconductor index. These are 30 stocks in the Philadelphia Stocks Index. Here I've got the FANG stocks. And for the summer, I thought we could first talk about how, and this is something that Jefferies really, got the ball rolling this week by talking about this trend of people and also businesses moving from these major city downtown areas, into suburbs, or actually work anywhere you want, and you could live anywhere you want. So there's people that are moving out to the suburbs and also moving out to the countryside. And so there are some thoughts that might help with just getting out of those, big condos into homes and maybe fixing places up. So there's Best Buy. This is one of the stocks they listed. Was Best Buy, Lowe's. Don't forget about Lowe's. Two, Home Depot. These are stocks in the stay-at-home, fix your garden up. Another Floor and Decor, FND. People are staying at home, they're looking around and at their digs and they're saying, this doesn't look so great. They're getting new floors. There's also Williams Sonoma. I like to go in there and see what they're got a cooking class going on. There's also Home at Home. Let's put these in. There's Wayfair. Wayfair and Amazon were one of the big retail pure online plays. And another stock that pops up is this Tractor Supply. I guess people, I don't know, they're starting up like mini farms or something. So what about you, Kevin? Are you interested in moving out to a more rural area?
Well, when I lived, so in Denver, I actually lived in Castle Rock on the far south side of Castle Rock. So I wouldn't say it's rural, but across the street, I had some farms, and we actually do have a Tractor Supply down the street, which is a phenomenal place because it seems like it has everything there. I can kind of understand it. It's actually
Is it
Tractor Supply.
I don't know what it is. I've never been in one. What do they have?
Yeah. I would say a Tractor Supply is the same as like the Blaine's Farm and Fleet here. So it has obviously a lot of things for farming, but they also have clothing there. They also have just like an Ace Hardware. So they have tools and snow blowers and lawnmowers. So it's kind of like a mixture between say like a Walmart and Home Depot. It's a smaller Home Depot, I would say. So it actually is very, very busy, and where I live, because of the seeds that they're trying to buy, and then also you are right, there's actually a huge trend out in the suburbs and in the country of farm-raised chickens, a little known fact. So that is actually something that's been a really big trend, and I know that it's been really busy at the Tractor Supply by my house with people buying that.
Well,
That's
so Legal, he had a couple chickens. He was in that market. He got eggs every day. Actually, recently they stopped performing. So he donated the chickens to this woman who's like the chicken whisperer. So, and I just read that to help encourage your chickens to lay eggs, maybe you should put a golf ball in their nest. And you know what? It's too bad. Maybe that could have helped Lee out, and maybe that would have made the difference, and he would have held on to his chickens. But no, because he has like a nice house out in, he's like nice land. So that sounds interesting. I have cousins in Greenwich, Connecticut that actually have chickens too, but I haven't seen one yet. That does seem to be like the trend. All right, how about traveling here? Let's go back and let's go to our watch list and let's create. How about road trips? Um, the RV sector is getting hot out there. There's WGO, Winnebago. And you can see what over the past month it's up 23%. And you can change the columns that you put up here. So click on the actions drop down, then click on columns and settings right here, and then this is where you can change the information that you have posted. So you could put up, I like to have not just the symbol, I like the description, because if I have a lot of stocks up there, I want to make sure that, I don't confuse what company it is. And then you could have performance. I like to see what it's done year to date, and I also like a 1 month change. But you could do a 20-day change. Maybe you're interested in just the past 5 days. You could have that as well. And other information I do like would be the implied volatility, the IV percentile, and the IV rank. So I like to have that posted, and you could change the order that they are listed by moving them up or down. And I also like to have the Schwab equity rating in there too. Now the problem is if you have too many columns, it can be tough. It can be tough to see, but I have just the right amount. I thought we could add a few in here. Let's see, we've got Winnebago Ford. They had earnings not too long ago. Thor Industries. We could see that they're up 40% over the past month. A couple other stocks is Camping World, CWH, and I believe that this person who owns a big chunk of Camping World is on CNBC. He's got a show where people, call him in and ask him to be a partner. And I believe that he does have Camping World, and he's done nicely. It's up 38% over the past month. CWH. All right, so are there any summer stocks out there that you want me to put on the list? And here's another one, PATK. I'm going to put that one up there on the watch list.
They also do something
with travel as well. All right, and also on the list is, this is part of the reopening trade, would be casinos. And I previously have a list of stocks that are in the news, like
the different airline stocks.
We have hotel stocks. I also have listed hotels. What else do we have? We have, let's say, Clorox. We have some other stocks that have moved as people, have to clean up around the house. But let me go back to my summer list and let's put in some of these other firms. For casinos, MGM. We'll put in Wynn. And we will put in, how about Boyd Gaming? Let's put that in. Just put that in. Add that to the list.
And
And a couple other stocks to consider would be Disney,
part of that reopening.
And
AMC.
Let's say the movies. I'm in no rush to go to any movie right now. I don't know about you, Kevin, but I probably won't be seeing a movie for quite some time in the theater.
Yeah, I agree with you. I'll probably wait until the movie comes out on Netflix to take a review and just watch it there.
Mm-hmm. Right. So that's how you could create a watch list here for stocks that you want to monitor throughout, for stocks that you want to monitor throughout the summer. And let's go and take a look at, Nike. They're coming out with earnings this week. Here we go. Type in Nike. And I went back to look at how the stock moved over the past 2 years. And this particular stock moved it moves about, on average, less than 5%. That's the average. That's an absolute move up or down. And now it's not it doesn't mean every time it moves 4.8%.
That's not the case.
So when you have an average, you smooth it out. So if you have just a one-time big move, of course, it reduces that. And so that's what traders do. They go back in time, look at those absolute moves, and then they average it out to help compare and to help actually determine, what should maybe this range of movement be? What could this potential volatility be for the actual earnings announcement? So they look to the past. It doesn't mean that the past, will tell us anything about the future, but it's just very helpful. Now we're also not taking into consideration what the actual announcement was, because the price tells us that, if it's good or bad. Okay? And so we're just looking at those absolute moves to get a concept of a range of movement. And so that's where we turn to see how the options marketplace is pricing in to be right now by going to the options chain. That's what we'll take a look at. Now, if we look at this 1-year chart, you can see that actually, when Nike came out with earnings last time, they actually, if I look at the numbers again, for Nike, their earnings fell, but they did beat estimates. And one of the bright spots with Nike was that their direct sales popped, I think about 13% or so. So their direct-to-consumer sales grew 13% last quarter. Now, the one issue with Nike is that they have not been, they're not giving us any formal guidance about where the company is going to go forward, how coronavirus is really impacting them. But some traders think that there might be, China might be on pace for recovery, and there might be quite a bit of momentum going on in e-commerce, which, they did better in at the beginning of the year. So we can see right now that volatility overall, it looks low. This is the implied volatility right here. That's the yellow line that I have down below. And let me overlay it on top. And Kevin, if you can you just talk about volatility?
Sure. So when we're actually looking at an event like earnings for Nike that's coming out on Thursday, before the event, so today and all of the other market trading days up to the event, you're going to see the implied volatility most likely increase. And that's because the market is anticipating the stock to move or the stock to have volatility. We'll typically see the implied volatility move up until the earnings announcement. Obviously, once we have the earnings announcement, the market will figure out the best price. And then the implied volatility is going to go back down because the anticipated event is now done. Everything is now over. You'll typically see these, and you just saw it on the chart there. Every time that you come up to earnings, you'll see the implied volatility move up, and then it drops, and then it just inches up higher and higher into the next event, and it continues to drop. Now, obviously, we see this one spike that happened because of COVID-19, which, Nina, you were talking about just a little bit ago. You're having the longer time frame. So not just looking back on the earnings that occurred in March, but looking back maybe 6 or 8 or maybe even 9 periods, earning periods, to be able to find a trend, because then that'll allow you to be able to look at the overall movement in a calm market, and then also be able to factor in big movements, obviously in a very high implied volatility type of market as well. So the more earnings that you use, and I personally look at 6 at least as a minimum of 6 earnings announcements. So you're looking at about a year and a half. So you can be able to tell a trend, and then also it doesn't have the outliers really impact the overall trend as well. So something just to keep in mind there.
Now the thing is, it moved today over 3%, so over 3.5%, and so that's quite a big move for a non-earning day. So let me put that in my
Nike did have some news that came out. I'm sorry. Nike did have some news. So JP Morgan changed their price target to $104 from $91, and that's like UBS changed their price target to $122 from $114 as well, which is a little bit of a movement.
Mm-hmm. So let's take a look at this chain. And so that overall implied volatility is right here. But if on my watch list, I have the IV percentile. Let me put up the Nike for the summer stock. I have the IV percentile. The overall IV implied volatility is 42. Now the IV percentile, about 82% of the time, the volatility has been lower. And that is the case. If we look at the past year, it has been lower. However, we had such a big volatility level over that end of March, beginning of April, that it was significantly higher. It was as high as over 100. So when you have a low volatility of 15, as high as about 100, when you have a volatility of about 40, you end up being in the bottom third in this case. So that's where the IV range is 30. On a scale of 0 to 100, where 100 is the highest, 0 is the lowest, with a volatility level of about 42, this stacks up in the bottom third. All right, so if you're buying options, you're paying more in time values or extrinsic values, and most likely after the announcement, you'll see the volatility drop significantly. It's especially seen in the shorter term options. If you're selling options, that higher volatility means you get paid more. You do like drops in volatility. However, the stock has to cooperate with you and go in the direction of the strategy that you want. So you don't get this money for nothing if you're selling options. Okay? You need the stock to cooperate with you. If you're buying options, pay attention to those break-even levels, and that's why many traders create spreads, because they limit their risk, especially if they're selling, and if they're buying expensive options, you could sell another option in the same expiration to create a spread. Now let's go to the straddle. Let's look at the at-the-money call and put. We'll look at the midpoint of each of those options. We will look at the midpoint of the shortest dated expiration, which is June 26th, with the stock trading about 99. we could, if there wasn't a 99 strike, we'd look at the 100. But in this case, we do have the 99 strike, and you could see that the midpoint is 5.6, it's $5.60. So the marketplace is pricing in for about, not quite, a $6 move, a $5.60 move, or a 6% move from now until Friday. This is also incorporating the rest of the week. Now, the earnings are Thursday after the close. So we'll have just one trading day, which is the final day to trade the announcement. And so most of this value is for the announcement itself, because it's the very end of the week. You might still see volatility increase. So the straddle might kind of sit still for a while. The volatility might increase as we get closer to that stage. So volatility will increase and it still will decay. So you might see this, any of the at-the-money straddles trade, around $5.50. That's a good guess. And so that's about a 1 standard deviation move right there, up or down. So, and that comes close to that. I'm talking about, if you go back over the past couple of years, you could do the math, look at the move, and you come up with about a 4.8% move, but you don't have to do all that. You could turn to the straddle, and that is what the range of movement for the marketplace is expecting will encompass, that 1 standard deviation, which is about 68% of the data points. That's where this would drop within. Now, it can move more than that. If it moves $12, that would be a 2, more than a 2 standard deviation move. If it moves $3, that would be about a half standard deviation move. So it doesn't mean it's going to move $5 up or down. It's just a gauge to help gauge, where it's at different levels, All right. So Kevin, what do you tell customers to look for before earnings?
Obviously, we're looking at the implied volatility. We're looking at the overall market expectation as well. But I also, for certain stocks, I like to also look at companies that are also competitors of them as well. So if they recently had companies that are competitors of them recently have earnings, how did the market overall just react? Did the other company beat on the top line and the bottom line? Was the company really in favor? And then also, what was the reaction of the stock that you're looking at when the other companies' announcements? So trying to just mirror a trend, mirror a trade from a previous type of earnings announcement is always nice to look at as well. It's not going to be 100%, obviously. Every company is different. But what do we typically look at? When we look at financials, I think JP Morgan usually is the one that kicks it off. If that's to kind of fall in line, and the market kind of gauges, all right, well, this is what JP Morgan did. What is Wells Fargo going to do? What is Citi going to do? What is Goldman going to do? We do that in every single market that's out there as well. So I also look at that just as an indication of what to expect.
Right, and you brought up different stocks. I mean, some people look at, they turn to other stocks that are similar. One of them would be, Dick's Sporting Goods. They might look at Foot Locker, for instance, check to see what happened there. It doesn't, check the trends. Some other stocks they might look at would be Under Armour. So exactly what you pointed out. Oh, wrong symbol there. UAA. Just to see, and some of the company's observations might hold for your, the competitor. So these are just different things to look out for. That's an interesting point. And when you create your watch list for different companies, that's why if I am trading 1 or 2 retail stocks, I like to look across the range and see what's moving. So we could add different stocks in here to my list. There we go. And so that's a good point as well. Check to see what others have to say after the announcement. All right, well, great. Once again, Kevin, thank you for joining me today. Thanks for co-hosting. And I know you're going to be back on several times this week. Are you on tomorrow as well?
I believe I'm on Thursday this week for a Street Smart Central walkthrough. So I believe that, I think that's going to be the only other segment for this week. It's always a pleasure, Nina. I really do appreciate
All
you
right.
having me on.
Oh, great. No, I appreciate that you joined me. So once again, thanks, Kevin. And don't forget that we have a lot of Trader Talk and a lot of Schwab Live sessions all week. So join us tomorrow. We've got Lee Bowl back with us and Craig Porozinski will be on with us on Trader Talk. All right, take care, everyone. Have a great afternoon. Take care. Bye-bye.